All right, folks, today is going to be all about debits and credits. But before we get to that, I just want to do a quick review over some of the financial statements and a little bit of that information that you're going to need to know in order to do this. So what I'm showing you here, this is up on Canvas. Basically, it's a printout with it's a PDF with the PowerPoints and some lines for notes right over here so that you can follow along. So if you're at home and you don't have this printed out and ready to go, stop this video right now, go to Canvas, download this, print it out, and get yourself ready so you can do it. If you're in class, hopefully you brought this with you. You would have been told to. And again, you could take your notes any way you want. This is just to help you follow along exactly so you have somewhere to write and to keep up with things. And if you happen to have one of those fold over type notebooks, you could take your notes right on there. Whatever makes you happy, but this is pretty helpful for you to keep track of everything. Okay? All right, so let's go take a look. Let me do the presentation for you on this. Okay? All right, so the first thing we're going to take a look at here, the big thing you got to remember to start with is what is financial accounting all about? Okay? Couple key things. Take a look up over here. Get my color, my pen right. It's for external users. The focus of financial accounting is outside the company. It's to report things to banks, to stockholders, to shareholders. And what are we really doing with this? Okay, now I know a lot of you are thinking, well, we're going to have to do all these debits and credits and things you heard about, and that's all true. But what it's really about is measuring what happens in your business and then communicating that information. And trust me, it's vitally important. So the real reason to communicate it, look here, for making decisions. So if you're a business major and you need to make some big money decisions, do you need to understand accounting? You absolutely do. Okay, so the first thing, don't forget the reason why you're doing this. Okay, you're a business major, and it doesn't matter if you're an HR major. One of the most expensive things in business are employees, and being able to explain the cost of your employees, the cost of retention programs, keeping your employees happy, saving from turnover, that's a big thing. If you're a marketing major and you graduate from school and you go to your boss and you pitch your boss a $100,000 marketing program, your boss, whoever they are, the first thing they're going to know is, if I spend $100,000, what should I expect to get back? And hopefully you're able to talk about new customers you're going to acquire, how long they normally stay for, the number of orders we can expect to get to make it make sense to them that if I spend $100,000, I'm going to get a lot more back. Okay? And if you're a management major, managers have to use numbers to make decisions all the time. And most people are in college because you got to remember, you're here because you want a good job, and usually you want to get yourself promoted. And the higher you get yourself promoted, you start to have financial responsibilities. So you may not be the finance person and you may not be the CPA if you're not an accounting major, but you still have to have a working idea about these. And for the finance majors, truth of the matter is, for you guys, a lot of what you do is all based off the accounting. So it certainly won't hurt you. Okay, so keep in mind, it's kind of important stuff. All right, first thing, you absolutely positively have to know this, the accounting equation. Now, if you remember what we talked about this the last time, the accounting equation you see right up here. Assets equal, notice its equivalency here, liabilities and stockholders' equity. Notice they tell you the assets are resources. These are things the company owns. Automobiles, trucks, equipment, buildings, things like this. And then the claims to the resources, liabilities, this is usually money that we owe, but sometimes we owe work, like somebody's paid us before we've done work. And then stockholders' equity, this is the money that we've either earned. There's two ways. We've either earned it, and it's called retained earnings. Explain that to you a little bit more later on. Or the amount of money invested when we sold stock. Okay? So you have to understand what these items are. Okay? And that's why we're going through this first. By the way, this accounting equation, that is actually the balance sheet. If you took the accounting equation and you put assets over here and then liabilities and stockholders' equity, you would have a balance sheet. Okay? And it has to balance. That's the name. Got to know it by heart. Okay? A couple other terms you're going to need to be familiar with in order for us to do debits and credits. Revenues. Revenues are just what they sound like. They're money that you get from either selling a product or service. You know, you walk into Walmart, you see all the things that they sell. This is when they sell those items, that's revenue to them. Okay. Now, expenses are the cost of either providing the goods or services. So if we go back to Walmart, you go in and you buy a pair of jeans at Walmart, you pay $30, right? Well, whatever those jeans cost Walmart, that's one of the expenses, among others, the lighting, everything else. So expenses are what things cost you that you're going to sell. If it's a restaurant, it's the cost of the food. Okay? Now, net income, and most people have a pretty rough, they have an understanding of this. It's how much money you take in versus how much everything costs you. Okay? And the bottom line after that on net income, on an income statement, that's basically your profit. Notice here they talk about sometimes earnings, or they call it profit. And then dividends. A lot of folks are a little confused about dividends, but for public companies or for corporations, when people, the actual owners of the corporation, if you remember from chapter 1, they're the shareholders. So when that company makes money, it actually belongs to the people that own the company, which are the shareholders. Now, usually the CEO and CFO, they're not going to take all the money and pay it out in terms of dividends. And the reason why is kind of simple. If they pay all that money out to you, what happens if something happens? This is number one. They need to have some backup money. Number two, they might want to use it to expand the business, to buy another business, to buy more equipment. So they're normally going to pay a portion of this out, and the idea is that they're going to take the rest of it and help you make more money. Okay? A little bit more about these ideas, some things here. So if we take a look, activities related to resources of the company, amounts owed, stockholders' investment. Don't forget, resources of the company, those are assets. Amounts owed. Normally amounts owed, they're talking about money, but on occasion, like I said before, it could be some sort of work where somebody's prepaid us. That's a liability. Stockholders' investment, stockholders' equity. And remember, these are items, these are going to be on the balance sheet. Balance sheet, okay? Distribution to stockholders, again, generally cash, paying back your shareholders part of the profits you have. Those are dividends. And then revenues and expenses. Remember, revenues, we sell product, the money we get for that, minus the cost. And again, if you're ever wondering, if you're trying to remember the balance sheet, all you have to do is remember what the accounting equation is, and you got the balance sheet. Okay? All right, so a couple quick checks here just to make sure you got it. Resources of a company. What are their resources, the things they own? What are those called? Well, hopefully you know. It's going to be assets. Okay? Next item. The amounts recorded when a company sells products or provides services to customers. We sell stuff. When we sell stuff, we bring in money, and that money is called, yep, you got it, revenues. Okay? Now, a little bit more about these financial statements, okay? The financial statements we're primarily concerned with are the four below, okay? For public companies, they have to put this out every quarter. So when you hear Walmart, or you hear Amazon, okay, Tesla, okay, publicly traded companies like that, meaning you can buy their stock on the stock exchange, they're required 4 times a year. They have to put out quarterly reports and then an annual report as well. And the primary financial statements, the ones we're going to be concerned with and that are required, are the income statement, and we're going to talk about each one of these briefly so you get an idea where all this is going. Statement of stockholders' equity, the balance sheet, and then the statement of cash flows, okay? And we're going to chat about each one of these a little bit. Don't forget, we talked about this last week, a little bit of a review so we know. See, the problem is you have to know the contents of these in order to do those debits and credits and journal entries, okay? All right, I'm just about out of time. I like to keep these under 10 minutes. I'm going to stop it right here, and we're going to be back with part 2 in just a minute.